Mario Draghi always likes to think he has something left in the locker, but the problem is he doesn't really have that much left. Joshua Mahony, IG. Well, the Bank of Canada makes the latest interest rate announcement on Wednesday, and with their North American neighbours looking increasingly unlikely to raise their rates, what will you be expecting from this meeting?
I don't think we're going to see too much, quite honestly. We haven't seen them cut rates since May 2015. I don't think there's really been much appetite for the time being for them to change that. We did see a number of numbers coming out recently. We weren't particularly portraying the Canadian economy in a great light, most notably the fact that we saw them post the worst quarter since the Great Recession in terms of GDP with an annualized rate of minus 1.6. But a lot of that was down to the Alberta wildfires, and of course that's not something that you're going to see monetary policy be able to do too much about, and it seems like a sort of short-term affair. So I don't think we're going to see too much. The one thing, of course, of the fact that we've seen weak numbers is whether they're going to start trying to pave the way in terms of the sort of language that we see around it for them to possibly cut in the future. The governor, Paulos, has said that he would be willing to go negative, so it's just a question of whether he tries to start paving the ground with it and the sort of language around the announcement.
Okay, well, investors appear to have growing concerns that the ECB is running out of tools in an effort to support growth and drive up ultra-low inflation. ECB board member Yves Mersch warned that radical policy measures such as helicopter money would cause unacceptable side effects. With this in mind then, what do you anticipate will happen in this week's meeting?
I mean, like you said, I don't think there's really that much left for them to do, quite honestly. We saw them pretty much throw the kitchen sink here back in March, and they've been trying to implement those policy measures ever since. I think Mario Draghi always likes to think he's got something left in the locker, and he always likes to try and devalue the euro. But the problem is he doesn't really have much left in the locker, and what he has been using doesn't seem to really be making that much of a difference. So I think we're probably going to see some updates on what we've heard previously, the previous measures and how they're working. And I think there's also going to be a continued focus on trying to push for governments to implement more sort of fiscal policies to back up the Eurozone economy. But yeah, I think they're sort of running out of options quite honestly, and I think everyone's so used to the idea of Draghi coming out with very dovish statements that I feel like one day he'll stop doing so, and all of a sudden everyone will think, wow, maybe we're very heavily on the short side for euro, and maybe we'll start seeing some decent uptick in the euro. So yeah, I don't think we'll see too much from them, quite honestly.
Okay, and lastly for today, which other data releases will you be keeping a close eye on throughout the trading week?
Yeah, I think the biggest event for the week for me, in the wake of this big services PMI beat, is going to be the inflation report hearings, with Mario Draghi set to be grilled not only about the inflation report, but now that we've seen him essentially come out with a whole raft of measures off the back of 1 month of poor PMI readings, and now all of a sudden all of them have been reversed, he's going to be made to look a little bit silly, quite honestly, because he's taken a big sort of leap of faith that those PMI readings were going to be the new norm for coming months, and actually they're not the new norm, they're a one-off. So it's likely that they're going to be pushing him on his stance following the sort of strong readings from these 3 PMI readings. Last week we saw a big manufacturing beat, construction didn't manage to get up above 50, but still a big rise, and now services, a massive rise. So, what we're going to see from him, we're going from a position where we thought that we were going to see rates cut once more before the end of the year, which is what he's essentially alluded to, and possibly further QE down the line. Now, they're probably going to try and push him time and time again for him to actually say that it was a mistake for him to have even enacted those measures in the first place. And, possibly we could be looking at a lot more of a sort of hawkish stance when it comes to the BOE outlook come the back end of that inflation report hearing.
Thank you, Josh. Be sure to check back to see how these market movers develop throughout the week, and check back with Kais Khalil for our wrap-up on Friday.